Bosh, how's it going everybody? My name's TradeX, this is my trading den, and today we're talking about part 2 of my trade management masterclass. Guys, if you have not already seen part 1, do yourself a huge favour, pause this video right here and go and check that out, because we go and talk about 3 really important topics. Number 1 is setting your risk to reward, number 2 was setting the level of risk you're prepared to take per trade, and number 3 was looking at the number of contracts we can take per trade dependent on those 2 levels that we've just set. You can also go and grab a free copy of my position size and risk management calculator, so it's definitely worth you watching that before jumping into this one. However, if you've already seen part 1 and you're wanting to watch part 2, guys, welcome. Today we're going to be talking about trade execution. So we're going to have a deep dive into the charts and look at how I specifically manage trades. This is hopefully going to help you move away from being a two-tick Terry and start moving into long-term profitability. So guys, without further ado, if you find value in this video, as always, please do consider smashing the old like and subscribe. It helps the channel out, and it also helps other viewers like yourself view this content, right? Now, let's get the intro rolling, and then we'll jump straight into the good stuff. See you on the other side. Okay guys, here we go. We're going to start piecing it all together, and we're looking at this piece of price action. This actually took place on Thursday the 6th last week, and we are doing a market replay, but the premise is still the same. This is exactly how I would frame a trade and execute my trade to terminus, alright? So personally, I like to go short on up candles and I like to go long off down close, so use that as you will, but we're going to be looking at why this was an area to go short first, and then we're going to look at how it was executed. Okay, now on the hourly, we had this order block on the hourly chart. So this up close candle, we're running into the base of it on this hourly candle, right? So that was one reason why we might get a level of retracement. Now we also, if we had a look on a higher time frame, we had another order block just on the 5 minute inside the order block on hourly. So we've got 2 reasons now. Also, if we know our PD matrix, we know that price has got to run through an order block and then a rejection block to get to an old high, okay? And we can see that we had a rejection block here on the 5 minute. So if we do not believe price is going to move beyond that order block, we could, it's safe to say we can put our stop just on the other side of that order block. What else did we have on a 5 minute where we could frame a reason to go short? We could use this 5 minute SIBI, right? So this 5 minute SIBI is a very accurate indication of where we can get into our trade, because these often act as support and resistance above and below pivot points, so pivot highs and pivot lows, okay? Now, we can therefore use this as our entry, and our stop is going to go just below, just above, sorry, the order block on the 5 minute. So we're getting in here, and our stop is going to go just above that high at 41.14, and we're going to drag this across. Now I'm looking at, okay, so if I get in this trade, where do I want to get out? And so I'll be looking for price to run into a discount. If it's fulfilling its objective, then I want to see where it's going to run into a discount, all right? Because its price is doing one of 2 things. It's either moving from a premium to a discount, or it's going to rebalance an inefficiency or seek buy side or sell side liquidity. Okay, now we can extend this range out and look for an OTE zone. So this is the optimum trade entry. And what do we have within that? We have this mitigation block. Okay, why is this a mitigation block? Because we have the low, the high, the fail swing low, and the aggressive displacement away. This is a potential for price to run back into. So this is where I would expect price to run to, where we could frame a trade. Okay, here we go. This is how I would start putting a trade together. All right, and piece by piece, we're going to slowly put this all together. Now, what do we have here? So we have a 4-to-1 R, right? We have a 4-to-1 R, and so this just about fulfills our objective from our R to R, which we discussed yesterday. So if we pull this across, we based our levels on a 4-to-1 R. So we have a valid trade that we can take as long as we allow it to breathe to terminus, all right? And we've got our risk capped at 200, and so we can jump onto sheet 1. We know that if we have 200 risk, 4-to-1 R, and our stop is 2, so we're getting in at 41.12, right? And we're getting out at 41.14, that's a 2 stop. So 2 stop allows us to take 2 contracts as long as we don't move our stop, okay? Now, that's all well and good, but what we now need to do is learn how to trade, execute a trade, okay? And this is going to be the game changer for many of you, and it's going to change a lot of people from getting stopped out for 2 ticks and allowing your trades to breathe to terminus. So let's play this out. We're going to press play and see what happens. Okay, so we entered our trades and price moved down, moved higher, moved lower. Now, I want to pick up something at this stage, because what I see a lot of newbie traders do, and we're going to delineate this red line as the stop, okay? I see a lot of traders do this. As soon as the trade gets into green, they move their stop just below it. Why? Because they don't want to see it move back on them and they want to get at least something out of their position. Guys, this is the first thing we need to address. If you get into a position at the right time, market makers are going to want to take you out of the position. It's just natural and it's what is going to happen. They do not want you to be on the right side of the move. So you almost have to anticipate price to move back on you, and you have to be resolute in your position. If it comes and takes you out and takes your stop, so be it. It falls back into part one. You have to be wrong 13 times in a row for that to happen, okay? Now, we are going to allow price to therefore run to our terminus. We cannot be chasing the stop and choking our trades. We cannot choke our trades. Okay, so we're going to leave our stop here and not move it, because if we do this, what's going to happen? It's inevitable that price is going to come back on us and bingo, take us out of the trade. That is retail 2-tick Terry. So when I mentioned earlier on Twitter, you have trader A and trader B, both getting in at the same point, one getting stopped out for 2 ticks and the other managing to terminus. This is a classic example of why that would happen. If you get in a trade, guys, and you're on the right side, you cannot be chasing your stop behind it within the first few minutes. You have to allow your trade to breathe. And you can see that we have only been in this trade for what, 7 minutes? Not even that. It's about 5 minutes, okay? From this candle to this candle, 5 minutes, all right? You'll notice that the majority of my trades, which are sort of 15 handles plus, I'm in them for well over an hour, right? So when you're getting into a trade, you cannot be sweating in the first 5 minutes, okay? You have to allow your trade to breathe. So let's move price forward and see what happened. So at this stage, the market makers have already taken out 50-60% of the traders who got in at the right time, some because of pure impatience and others because they chased their stop behind their trade entry to make sure that they got something, even if it was 2 ticks, out of the trade. Now, we can see here that price has continued to move down, right? This is where the professional trader looks to take partials. And for me, I would be looking for places within my trade to pay the trader. You have to pay the trader. I know this is the benefit of hindsight, right? But this is honestly how I manage my trades. And so what we're going to look at is this midnight open price. This is a level where you would anticipate price to respect, okay? And we also need to be looking at our PD arrays as price moves back into a discount. And what did we have here? We had this order block, this bullish order block, right? We could have looked at medium threshold as a place to take a partial, right? So if we just delineate and mark this out as partial 1, all right, partial 1. You have now taken 1 contract off. You have paid the trader. At this stage, I have still not moved my stop, and I'll explain why in a moment. But at this stage, I have still not moved my stop. What most traders will do, as soon as they get halfway or they feel like they've got something out of the trade, they'll immediately move their stop below it, right behind it, and they'll hope and cross their fingers that price continues to run down to hit their terminus. Guys, if we are using 4-to-1R, we have to allow our trades a chance to get there, because if you're just cutting them short here, this is only sort of 2-to-1R, and you're not therefore getting ever at any point your 4-to-1R, and so you're falling into that trap of almost being a scalper, even though your premise and your idea and your thinking was correct, all right? We cannot be moving our stop behind our price point until we get a market structure shift on our own trade. And what I mean by that is this. I want price to come back and test me. And as soon as I get a market structure shift in my own trade, this is when I move my stop, and only then is when I move my stop to that pivot high. This is effective trade management, okay? And so we're going to play this out. We're going to play this out. And we're going to play this, and what will happen is the newbie trader will be sweating, right? And they'll be watching price and think, I don't know what's going on here, right? What also happens, and I see a lot, is retail traders are hesitant to pay themselves, or they just don't know when to pay themselves. And so the professional trader has taken a partial off. They've paid themselves. So they don't mind if price comes back and runs on them, okay? They do not mind if price comes back and runs to take them out, okay? Because they have already paid themselves. They have already paid the trader, okay? Now, the retail trader at this stage is absolutely nervous, right? Because they haven't paid themselves and have seen them price run back on their position. So what they do is they run their stop all the way, guess where to? Just on the other side of their entry to make sure they get some green out of it. Again, this is the second example of where you get to tick Terry from, right? They didn't pay themselves. They're now nervous that price is going to come and take them out of the position. They get a small loss. So they put their stop just inside the other side of the entry, and guess what? Price comes and takes them out. This is what I was saying about market makers want you out of the move before the major move materializes. So at this stage, guys, I've still not moved my stop. I have still not moved it. I am waiting for that market structure shift in my own trade before I move my stop, knowing that I've already paid myself. So if it comes and runs me out, I don't care, right? I do not care. So let's see what happens. That's taken out another 30% of traders who were too nervous to stay in their position, and price ultimately continues down, right? It's at this stage, guys, we now have the market structure shift in our own trade that I move my stop on my runner to here. So now my runner is in profit. So if it runs back on me, at least that runner is now going to materialize some profit. And at this stage, I would not move this. Price is either going to hit my terminus or take me out. Either or. I'm not going to chase this. And a lot of people message me and say, look, what, so you're going to leave, like, what is this? So from 40.11 down to 40.02, you're going to leave like 8-9 handles on the table? Absolutely I am. This is the difference between capturing 2 to 3 handles and 10 to 15 handles, okay? Now let's play this out and see what happens. Price continues down, bingo. It has taken us out of our trade, right? It has taken us to terminus, all right? It has taken us to terminus. Now, what I would say is if I had a deeper trade objective and I had 3, this then just replicates. So say I had another contract and I was waiting for price to run down. So say I was expecting price to come and take these lows, right? So this was now my terminus, right? So if this was a completely new trade, and imagine I had 3 contracts, at this stage this would have been this level here would have been where I would have taken another partial, right? So if I quickly just duplicate this, right, that would have been my second partial. So I would have taken off 2 contracts out of this trade. At this stage, I would have just 1 runner. My runner would stay here, and this is what I talk about when I mention sacrificing the lambs. You have to sacrifice your contracts to allow them to breathe, to have the ability to run to terminus. So in this instance, if I was expecting price to come and run and sweep these lows, I would still have 1 contract remaining, and I would leave it until I got another move higher and then a break of market structure shift. So I would not move this stop unless this happened, right? So price came up here, so it got all up there and ran down, and it got a market structure shift in my own trade. At this point, I would move my stop to here on my runner, and I would wait for it to run to terminus. But in this instance, we're going to wait to see what happens. We're going to press play and see what happens. So price moves down, moves higher. I still would not have moved that stop on my third runner. I still would have held it. I'd still be holding it. I still would not have moved it. At this point, it is still up here, okay? It is still there. It is still there. It is still not giving me a market structure shift. It has still not done it. It's moving back on my position. This is my third contract, so this is my runner. Bingo, it took me out. I sacrificed that last contract to enable it to run to terminus, but I do not care that it's taken me out. It's gone for profit, whilst also allowing my trade the potential to reach that ultimate terminus point, okay? So that's going to cover absolutely everything you need to know in my trade management masterclass. Part 1 and part 2 is now complete. So you guys can take this information into your trading next week and start executing like a professional. Guys, if you found value in this video, please do consider smashing the like and subscribe. It does the channel a world of good and helps other viewers like yourself view this content. So guys, if you do decide to join Red Pill, the links are in the bio below. You're more than welcome to join, and if you do, I look forward to welcoming you on the other side. But until next time, trade safe, trade smart, and I'll see you soon. Take care.